You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Once again, time for a little program we like to call around these parts Options Bootcamp, what the cool kids call the old OBC. My name is Mark Longo from theoptionsinsider.com. If you haven't been over there in a while, a lot of cool stuff on the old website. I encourage you to visit it. Of course, links to all of our shows, great articles from throughout the day. Most actives, all that earnings data we're always talking about, it's all there for you for free. We like you folks on that front. And then, of course, if you want to go above and beyond, join us live here for this show, everything else we do throughout the week. Great pro Q&A session with Mr. Scott Nations yesterday, talking about all things vol. Some of that going to spill over into today, I have a feeling. And, of course, Options Oddities every Friday, the giveaways, all the other cool stuff. theoptionsinsider.com/secret club. Secret, just for me and you. Just for me and you, the one guy who's listening out there. And that's, don't even let Dan hear. Just between me and you. And, of course, however you listen live after the fact, if you are after the fact, of course, we ask that you just keep rating and reviewing. It does help all the new folks discover the show. And, of course, keep sending those questions in. We do love to hear from all of you guys and gals out there, regardless of the platform on which you consume the show. And, of course, I have unfairly maligned him. Let me now welcome him back. He is back from his vacation hither and yon, so we are back live in your ear holes. He is the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program. How goes, or I should say, how went your vacation, sir?
No vacation, Mark. I'm working for, well, I guess I'm working for my traders. I'm going out there and I'm educating and helping to bring people on to build an army of successful traders. And that's what I was doing. No rest for the wicked, my friend. No rest for the wicked.
So all that wine drinking, everything, that was all part of the business, huh?
No, well, I'll tell you what, I did go wine tasting, but that said, I've given up drinking of any alcoholic sort for Lent. And so this is the first wine tasting experience where I actually spit it out, which is not as fun as, actually swallowing it. But it was still kind of nice.
That brings back all sorts of horrible memories of the Sideways movie. So instead, let's just keep on rolling. That's such a disgusting scene. I hate that scene. As we keep on rolling right on into, actually, before we keep on rolling, I mentioned to you, we love when you guys take the time to rate and review us, give us 5 stars on whatever platform you're listening on. Just like this is from Suisse. Hope I'm pronouncing that correctly. I don't have here the platform this was from, but whoever takes the time to rate and review us out there, we thank you. And Suisse says, a great mix of evergreen educational content and discussion of timely topics affecting the options market. Spoiler alert, we may have one of those coming up today. A truly great listen for new options traders. Get it! Exclamation mark. Well, Thank you for that, Cerise, and everyone else who takes the time out there to rate and review us. It really does help all the new folks who are discovering the show en masse these days. We welcome them all as we keep on rolling right on into the basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Call in. Prepare to learn. Yes, sir.
All right, everybody. Time for a little bit of basic training. And, the last couple of episodes, Dan and I were knee deep in the wild and woolly world of volatility. We thought it was time to really do a nice overview, an encapsulation, if you will, of what is going on out there, what is available to you folks from a volatility trading perspective. We talked, of course, VIX, the options, the futures, some of the origins and nuances and changes that have gone on with that product. Of course, in the subsequent edition, we talked about some other products you could trade in the volatility space, including VXX and UVXY and all kinds of other stuff out there. VolQ, the creator of which got nations just on our Pro Q&A. Yesterday, Spikes, which we talk about all the time on our Volatility Views show, and a whole bunch more. It was a very interesting show, if I do say so myself. A very interesting two-parter. So if you missed it, A, what are you doing? You got to go check those out. And B, you're kind of going to be at a loss for today's show. So check those out before you get into today's show. Because, Dan, I knew when we got into that subject matter that it was going to spark some questions from people. And it did. A lot of people had questions, including, as our reviewer mentioned, about a timely thing going on in the volatility market. We got a bunch of people asking a similar question. So we just picked this one here from Tom. Tom says, hello, OBC. Well, hello, Tom. He says, I love the show and learned a lot from the past 2 episodes about volatility. Glad to hear it. He says, I've been hearing from a lot of people that VXX has gone crazy. Can you explain what the heck is going on with that product? Is that something we should look out for? Well, yes, this has been kind of all the rage, been a bit of a recent development. This all kind of popped off really right around the time that we were recording. Actually, because we recorded several weeks ago. It all popped off really a few days after our last show, and it's kind of been unfolding ever since. And so this is our first time back live, so our first chance to really address it. Dan, is this something that has come across your radar? Have you had a lot of your mentees and folks over there in your MTM chat asking about what's been going on with VXX? And if so, what are your thoughts, sir?
Yeah, I did one whole section of our Trade Smart workshop all on VXX because it's, from the outside, like gone crazy seems about right. But in actuality, like it all really kind of makes a lot of sense. So yeah, this will be a fun discussion.
Yes, this definitely gets into one of our timely episodes, but also evergreen in the sense that we're going to talk about some of the other history of when vol products have gone crazy, which is kind of like what's happening now and has happened once or twice or many times in the past. So let's get into what's happening now. Then we'll look a little bit back into the past. So as our listener said, I believe it was Tom, he said, it's gone crazy. What does he mean? Well, VXX, we talked about it on our last show, attempting to replicate that near-term VIX futures position. It's been issued by Barclays. They're the ones who oversee that. Remember, we said at the time, it's an ETN. It's an exchange-traded note. So you launch that note and you attempt to effectively deliver on the returns of replicating that position over time to the note holders out there. Well, what happened after our last show was, I believe, the 14th is when all this went official, which was a Monday. And then we saw crazy madness unfold in the market the next day on Tuesday, is that Barclays came out and they said, well, I'll just read their statement for you, listeners. So they're suspending creation of new shares of VXX because they do not currently have sufficient issuance capacity to support further sales from inventory and any further issuances of the ETN. They say these actions are not directly related to the crisis in Ukraine or any issue with market dynamics and the underlying index components, but we all know there's a lot more to it than just that. So this is an ETN. Remember, this is something that's supposed to track that value of that near-term VIX future. What happens when they suspend issuance of new shares, listeners, is effectively it goes off the rails a bit. It starts to trade more like a closed-end fund rather than what it traditionally is, which is something that tracks that underlying performance. So, the closed-end fund, the value of the assets is only kind of a starting point to the conversation. Closed-end funds can trade anywhere based on supply and demand. And that's effectively what we saw after this announcement came out from Barclays. On the 15th, that's when VXX really went hog wild. It went crazy out there. It was halted 5 times in the first hour of trading. It jumped almost 50% over that time, and just a lot of insanity going about. A lot of people hearken this to almost like a short squeeze we saw in a lot of these meme stocks last year. There was limited supply. This was a product that is inherently short vol. All of a sudden, they suspend new issuance. There's no new supply coming in. The people who are short this thing now, of course, are left holding the bag. And so a lot of people dove in to try to drive this thing up. It swung wildly. Like I said, it was halted 5 times just in that first hour, and actually ended up closing the day, I do believe, down a little bit on the day. So a crazy trading day in and of itself. As you recall, listeners, we said on our last episode, VXX and even more so UVXY, these are products that are very much should be relegated to your short-term trading arsenal. These are not long-term buy and hold type products. And this type of wild swing intraday is one of the reasons why. We said, when the VIX futures get backward, remember, and those near-term futures get a little bit juicier than the longer-term futures, that's when products like VXX start to go a little bit crazy. Actually, they tend to sometimes outperform in those periods, and because of the rolling mechanics that we discussed on our last episode. But when the issuer steps in and says, we're going to change the rules midstream, that's when things tend to go off the rails. If you're wondering, are things back to normal? We have not yet received any guidance from Barclays as to when they're going to start issuing new shares of this. So things are not back to normal. Vol has come off markedly since our last show. Yet as of the start of this week, VXX was trading at a huge premium still to effectively, its NAV, the value of its assets. Listeners, it was nearly 19%. That's the highest it's been pretty much since they launched this note back in 2018, January of 2018. Remember that date, because February 2018, we're going to come back to that a little bit. That's another very historic and pivotal moment in the volatility space. So they've been through some stuff with this note. They lived through February of 2018, and still the premium did not get as high as it is right now, nearly 19%. At the same period, though, you might say, how's the tracking? Well, the tracking's off the rails now, too. You buy this thing because you ostensibly want it to track those near-term VIX futures, or maybe you're buying puts on it because you think it's going to go down, as we discussed on our last show. During that period, we saw that near-term future go down a little over 20%, about 21%. ETN only went down about 12%. Again, all that kind of buying pressure kept it at levels probably we would not have been at otherwise, given everything else going on in the marketplace. So this product not trading like it normally does. Dan, you mentioned this is a hot topic with a lot of your listeners and a lot of your clients over there. And you said, may sound insane, but it actually is kind of rational. Why don't you give us your thoughts on everything that's going on out there in VXX right now, sir?
Well, there's a couple of things. And, you mentioned some of them, but I feel like not necessarily all of them. VXX started to decouple a little bit from VIX even before then. And it was a very interesting scenario. As we've talked about, probably on a few episodes of Boot Camp, there tends to be a downward bias in VXX. Mark just sort of referenced that a little bit earlier. And that's because of the roll. And what happens is typically the VIX futures are in contango, which means the further out, the higher the price of the future, the further out in the future expiration, the higher the price of the future. So they tend to so when the fund managers do the roll, they sell the lower priced future and buy the higher priced future, and that weighs on the value of VXX over time. But it's not always in contango. And there was a period where it was actually in backwardation. And so the fund managers would be basically selling the more expensive one and buying the cheaper ones. And that's because of, the war in Ukraine. Like, people have feared short-term volatility more so than long-term volatility. So there actually was, even before this new Barclays announcement came out, there was actually, for a rare period, an upward bias in VXX compared to VIX. And then to boot, we get the news that Barclays is going to stop issuing more shares. And that's where we got that crazy spike. And that one, there wasn't, it was a knee-jerk reaction. So that part I wouldn't call logical. I'd call it a knee-jerk reaction. And the smarts and the quick were able to capitalize a little bit on that. And now VXX, now the news has been sort of digested. VXX is back into a slight contango. And I don't know, it's still probably going to remain a little bit elevated until we get a little bit more visibility on what Barclays is going to do going forward with issuing shares. But it's a lot more normal than it was for like the past month or so.
Did you sling any VXX during that period, sir? You or any of your crazies in your MTM chat, sir?
I did a little bit. You just gotta take advantage of stuff when it's there, On the day of, like when it started spiking, I sold some call credit spreads in VXX. And it ended up working out. I did take a little bit of heat on it for a bit.
I was going to say that's a dangerous foray early on. These products can just explode into oblivion, right?
Yeah, but I was consciously betting against that. And yeah, as we both know, sometimes those bets don't work out, but this time it did.
Moral of the story right now, VXX, as you mentioned on our last show, it was already kind of primed for a little bit of upside action with that brief period of backwardation, which was made. It was very primed for this. So when all this decoupling happened, all of a sudden, it was rearing to go to the upside. So it was kind of a unique phenomenon when all that happened. And that's usually when we're going to see these products really decouple, is when things explode to the upside. That's when vol tends to explode up and then drift down, not usually the other way around. So right now, VXX and Barclays, they haven't really issued any guidance as to when they're going to start issuing new shares. So if you listened to our last show, you were intrigued by VXX, I would just give you the caveat that these are not normal times for VXX. It is not behaving as it normally would. I would maybe caution you, this is your first time dipping your toes into those vol products. Maybe you hold off for a little bit until things get a little bit more normal. VXX goes back to, as some of our other hosts has called on some other shows, it's predictably crappy self, where you know how much it's going to erode given what's going on in the VIX futures, and you could reliably trade that. So yes, I would, maybe if you're newer to these products, stay away. If you have traded them a little bit, you're diving into them right now, just be cautious. These are strange times. When they start changing the rules of the game midstream, and they start issuing these kind of proclamations with these products, we've seen this before, and that's when things get to be a little crazy, a little hairy out there. Let's dial it back a little bit and talk about when we have seen this before. This is, as I mentioned, this is not the first time a vol product has gone crazy. Let's go back all the way to the heady days of 2012. Crazy, a decade ago now. Seems like a lifetime. So much has happened since 2012, but even 2012, we were 4 years already past the great financial crisis. So things are just crazy. But back in 2012, one of the other very popular vol products out there was TVIX. You guys probably have heard of this one. It was delisted a few years back now, but it was a super popular product up until then. They did something similar. They stopped issuing new shares. That was also an ETN. So this has happened with ETNs in the past before. They did it for almost a month, and TVIX went crazy. Kind of a similar thing. It completely decoupled to its asset value, traded all over the place. Ever since that happened, I warned a lot of our listeners against that product. Whenever you see something like that, when a product can just decouple because they're just kind of changing the game midstream, that was something that you don't want to deal with. They actually, we talked about a 21% premium right now for VXX. TVIX got up to about 90% over its NAV at that time. So that's just talking insane levels of extra premium out there. When you're seeing that kind of stuff, that's where, as I say on the previous shows, fools rush in where angels fear to tread. There can be some opportunities, as Dan mentioned, but you got to be pretty savvy and pretty swift, and also be willing to take some risk on these products. And so that's not you. Stay clear of these things. TVIX ultimately was delisted not that long ago, so it had a decent run, but That was one of the first times we saw a kind of an issuer-oriented issue, to put it mildly, pun intended, with a product like this, where the issuer stepped in due to some complications with fund flows and things that were outside the normal scope of there wasn't like vol was spiking then. It was just a problem with their flows, their fund flows around this product that caused all these issues. And so if that's the case, if it's behind the scenes mechanics, you definitely want to stay away from that product. Then, of course, fast forward to the date I mentioned earlier, the one I said we're going to come back to, which is February of 2018. For all of you new kids out there, and we know there's a lot of you who've only been trading 3 months, 6 months, a year in the options market, February of 2018 may seem like a long time ago, but that was what was known back then as Volmageddon. We saw this massive spike intraday in the VIX index. I don't like using percent of percent. VIX is already a percent, so you say it moves X percent. It drives some VIX people crazy. I'm going to do it now because it's just an easier way to convey what was going on for a lot of you newcomers out there. VIX surged over 100%, about 116% intraday. And that was back in February of 2018. So what happened? There were a lot of products back then that were short VIX. That was what they were. They were inverse VIX products. XIV was the most infamous of them all. Now, you know what happens when you short a stock, listeners. You have limited profit potential and infinite risk. The stock can go to infinity. Same thing with volatility. Volatility can go to infinity and your profit is limited to zero. And so if you think about it, if you're constantly short VIX all the time, you always have that risk that something, if it explodes to the upside, you're maybe going to be wearing it out there. And that's pretty much what happened to XIV. That event drove them pretty much to oblivion. It lost 97% of its value. And they pretty much ended up shutting the thing down. Credit Suisse pretty much unwound it. In fact, it was a lot of people still blame the rapid buying of futures to rebalance XIV, which is one of the reasons why that vol spike was so bad. It really accelerated towards the end of the day, which is when all the rebalancing typically goes on for these types of products. So that went the way of the dodo. A lot of people thought that was going to be the end for inverse volatility products, but no. But we'll get back to that in a little bit. Another inverse product around that same time, SVXY. You may have heard of this. It still trades. That one lost 91% of its value. And so pretty much overnight with that one as well, they came in and changed the game there and said, you know what? This used to be pretty much a levered product. Now we're going to cut that leverage in half. So the leverage you bought, I had options on in this thing. A lot of people did. It was a very popular product at the time. So you bought options on this product expecting a certain amount of leverage, and they came in mid-cycle. They didn't say, hey, for new contracts, new shares. No, this is just for everything across the board. We've cut all this leverage in half. So guess what happened to all the premium in those options, listeners? It just went to nothing because this product now was a neutered version of itself. It was really one of the first times we've seen a mid-cycle, just complete changing of the rules of the game with a product like that. A lot of people, myself included, are still kind of angry that, OCC and the exchanges allowed that to go through. That's a strange thing to see people and firms changing the specifics of the contract that you bought mid-cycle. That is a very strange thing. And so now SVXY still exists. It's a neutered version of itself. It's only 1/2 inverse now. And so that's really killed a lot of the demand for it for a lot of those people. Dan, I'm sure you recall those heady days of Volmageddon back in 2018. We were doing the show back then in 2018. What are your thoughts on that? And of course, the infamous death of XIV and the effectively neutering of SVXY, sir.
Yeah, I think we did a whole episode on that, if I'm not mistaken.
I would be surprised if we did not, sir.
Yeah. This is something that I think we've talked about in the past, maybe me more than you, but just like some of these very, very complicated leveraged and inverse ETFs are just so like I don't know. It feels like the only people that benefit from them are the ones that list them and make money off them. I don't feel that they have any economic purpose. I don't feel that they provide value to the market. They don't help the everyday investor or even the really active trader. I mean, the arbitrageurs trade them, but then every once in a while, a black swan comes by and, even wipes out the arbitrageurs. So it's just, I don't know. I mean, they keep listing these crazy things. Like Warren Buffett said, wrongly and ironically once that derivatives are weapons of financial mass destruction, even though he trades them. I guess he was just trying to be dramatic or something. And, we know they're not. But once you start getting derivatives of derivatives that are leveraged and inverse, that are already based on an extremely complicated product, you no longer are providing value to the market. I mean, that's my opinion. That's just my opinion.
I'm glad you said that because I wanted to get your thoughts on that because you're right. These are contentious products and they are very divisive out there, even in the community to this day. You said you don't think they provide a lot of value. A lot of people were very angry with the way XIV unfolded and imploded and how it took a lot of people. We saw it across the board. We heard about it from our listeners on this network. A lot of the brokers heard about it. There were people, your proverbial grandmother from Iowa. That's who was in these products a lot of times. People who had no idea what was going on, what they really owned, and what could happen to those holdings as a result. In fact, that they could lose all of their value. So a lot of people thought that these products shouldn't come back. You're not alone. Like I said, Brian Overby, who does our OPR show, he's spoke at length about how he thinks these products, like you, don't have a lot of value to people. They're pretty much all risk. People who get involved in them often don't understand what it is they're buying. So a lot of people thought this was the end of the inverse products. And it pretty much was until the end of last year, October of 2018, when the regulators decided in their infinite wisdom to approve a new version of XIV. Now, it has not listed yet, so the proof is still yet to be seen, but it has ostensibly been designed to avoid a lot of those shortcomings, including that end-of-day acceleration event that really kind of killed and put the nail in the coffin of XIV and drove the vol markets crazy for a while there. So I'm waiting to see. I'm going to be cautiously optimistic, even though the cynic in me is wondering. But at the end of the day, you're still short vol, right? And we've seen what can happen with VIX. No one has infinite pockets. VIX can go up theoretically infinitely, and your pockets, you can't remain solvent all that time. So it is a high-risk product to issue. But clearly there's demand for it. SIBO would like to have it back because that rebalancing drove a lot of volume in VIX futures. VIX futures have never really recovered from the death of XIV. So a lot to keep an eye on there. So if you are intrigued, if all of our warnings haven't put you off this, and you are intrigued by dipping your toes back into the realm of inverse volatility products, then stay tuned. New product approvals and listings have kind of slowed down in the wake of everything going on with the pandemic and, of course, crypto and everything else out there. You heard Scott, if you listened to our Pro Q&A yesterday, that it's challenging to get new products approved right now, particularly in the vol space. But when those products launch, we probably will talk about them again here on good old Options Bootcamp. So to kind of bring it all back home, moral of the story, VXX, as our listeners put it, has kind of gone crazy right now, though it does make some sense if you've been paying attention to these products for a while. So be very cautious when trading that. Also, this is not the first time this has happened, that an issuer has stepped in and kind of changed the rules of the game of the product mid-cycle. So at this point now, you should be kind of used to it. You should maybe be a little bit prepared for that if you are trading or going to trade these products. You should know at a certain point, a wild card could come in and just change the whole game completely on you, which is something you shouldn't bet the farm on these things. You should be very quick on the trigger finger with a lot of these and only really put capital to work in these where you understand the product and it's risk capital. It's not just a set it and forget it type trade. So something to keep in mind with all of these. They are Franken products at the end of the day. They're all trying to approximate some other position, front month VIX futures, inverse VIX, whatever the case may be. And they all do a sometimes better, sometimes worse job of replicating that. So bear that in mind. With these Franken products, you can have all sorts of issues, especially in periods like now where vols got a little lofty and things are getting a little bit crazy. So caveat emptor applies to all of these out there, listeners. Beware if you're out there trading these. And now we haven't had a chance. We've been talking so much vol. We haven't had a chance to get to a lot of questions out here. So let's see if we can squeeze a few of you in with the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. Dan, I know you've been champing at the bit over there because you're getting all sorts of crazy fun questions from your mentees over there in MTM land. What would you say has been the question of now the last couple of weeks since the last time we've been live, sir?
Well, one question that I get all the time, Mark, and maybe you can help me out with the answer to this is, Dan, how can you be so much.
How is Mark so unbelievably sexy? Yeah, I do get that a lot. You know? They call me the sexiest man in options for a reason.
Oh, well, tell your mom. Okay. So, let me think. I was doing our group coaching class this week. I was filling in for John because he's off with a well-deserved vacation. And I'll tell you what, here's one question that I just got this morning from a brand new trading student. He said, how big of an account should I get started with? And I'll tell you what, here's what I recommend. I recommend a $5,000 account. And generally no more. Like even if you have, $10 million you want to employ in capital, which some people do, it's really great to start really small, trading one lots, get your feet wet. Once you can prove that you can make money trading a $5,000 account, then you can start trading a $10,000 account, then a $20,000, then a $50,000, then a $100,000. But so often I see people start out and they're like, well, yeah, here's my savings account. I got 50 grand. I'm going to put this into account and, let's go. And they just kind of jump in with both feet. And I mean, that's not good with any endeavor, right? I mean, not even just trading. Like if you're, I don't know. I mean, if you're learning to ride a bike, you don't get like a super souped up bike and go down a hill and pedal as fast as you can, take it slow and get your bearings. So best advice there, start small, build your confidence, and then ratchet your way up.
There'll be music to the ears of a lot of our listeners who are maybe only starting with around $5,000. So they don't need to start with 20 grand, $5,000, doing one lots. That'll get you in good stead. You have a decent understanding of how these things work. Speaking of keeping things small, Dan, that dovetails nicely with our question of the week right now. We ask you out there right now, get an @options on the old Twitters to make your voice heard, listeners. So some people refuse to trade options on, quote, cheap stocks. Are you in that camp, or will you trade options on anything? Quite simply, what is your cutoff point where the stock becomes too cheap to trade the options? Is it below $15? Is it below $10? Is it below $5? Or do you have no limits because you're a savage? Mr. Dan, I have a feeling I know where you're going to go, but what is your vote, you savage you? And B, what do you think our audience is voting for?
I have been known to trade options on very low priced stocks, especially with our options rater.
That's the entirety of your rating, right?
Yeah, well, not all of it, but it is a fair amount of it.
If you traded nothing below $5, there would be very little ratings.
So yeah, I mean, I'm okay trading, buying options at a 9 cents or something like that. And yeah, one of the big problems with that is that, your commissions end up taking up a bigger percentage of your trades. But if you have an opportunity, sometimes you just have to pay up a little bit to exploit that opportunity. And your other choice is just to not take that opportunity. And sometimes that might be okay. It is a business decision. But for me, sometimes that decision is I'm okay paying a higher percentage of my, capital or my profits for commissions because I want to trade this thing.
Yeah, a lot of old school traders used to have the viceroy on our option block program all the time, Alex Jacobson, and he always disdained trading options on anything below $10. He thought at that point the stock is an option. So it is certainly, there is that mindset out there. But right now, our audience is with you, Dan. They're a bunch of no-limit savages. 40.5% have chosen that, followed by below $5, which is a traditional cutoff point for a lot of people, about right around 21%. And then, actually, I take it back. Number 2 is below $15. That's pretty high. 31% of our audience says they won't trade an option on a stock below $15. Wow. Okay. Ford is almost at that cutoff. In fact, that's what Overby has joked in the past. That's his cutoff, wherever Ford is trading. That's where he won't go below. So he had some problems when Ford got into the mid-20s for a while. That took a lot of things off the table for him. Then number 3 is below $5 at 21%, and rounding out the votes right now, about 7% for below $10. Where do you fall, listeners? Get over there to @options, make your voice heard. If you're listening to this many years down the road, like I know a lot of you do, just head on over to our handle anyway, @options. Chances are there's something good percolating over there right now. Let's go out here, a couple more really quickly just to pay off some of the people who've been waiting patiently. Let's go to this one really quick, Dan. Jason's been waiting for a while. He sent this in weeks ago. We haven't done a Q&A in a while. He says, I apologize if this has been covered. I'm behind a couple of episodes. Well, that's good because we haven't had a chance to get to it yet. He says, what happens to a short put if the ETF liquidates before expiration? So, Dan, this is very much in line with what we were just talking about with when the vol products go crazy. Most of those, what we were talking about, are ETNs, but the same kind of thing applies to an ETF. Dan, I'm sure you've lived through a few of these in your day. What do you have to say for Jason here? He wants to know what happens to a short put if the ETF you're short the put on liquidates before expiration, sir?
I always like to cover myself on things like this and say, if and when that happens, and not before, because you won't get the right answer before. If and when that happens, your first phone call is to 888 options. That's the Options Clearing Corporation's helpline, and they will give you the definitive answer. Now, to protect yourself, you're going to have to trade out of that beforehand. And what I think would generally happen, but I've seen rules change in ways that are not what I think they would be. So, don't hold me to this. And I'm not just saying that to cover my ass, but I'm saying this because it's true. Like, anything can happen. But what is likely to happen is that put basically gets expiration day early. And so let's see, if the ETF liquidates and thus goes to zero, if that's the scenario we're talking about, then it would be like it traded zero at expiration day. And you would, let's see, I would imagine it would be a cash settled event, and you would just lose that cash, you lose the intrinsic value of that cash, is what I imagine would happen. And I think it's safe to assume that would happen, and make sure that you don't end up in that scenario.
Yeah, this is always something that could happen. We just talked about a lot of these big vol products having issues or unwinding or imploding. So it can happen when you're trading some of these more esoteric Franken products, Jason. So yeah, that is good advice. Always go to OCC. Dan's right. Usually in those scenarios, you're going to get some sort of settlement value, or as you mentioned, if it completely liquidates and goes to zero, that settlement value is going to be zero. So your options are going to settle out at effectively that price of zero, and you're going to be on the hook for whatever the distance is between your strike and zero. So it is not an ideal situation by any means. So if you have any even remote concerns about this happening, either spread off your put or just take it off entirely, and then live to fight another day. All right, Mr. Dan, done a lot of living over the past few weeks. This quick little topic we thought we would touch on a few weeks ago on the show has spiraled into 3 weeks worth of shows, sir.
Wowsies, holy moly.
Who knew there was so much to happen, and that Barclays would be so considerate as to do another mid-cycle event to keep the vol talk going, sir. They've been very kind to us.
Yeah, it is. We should, I don't know, send them a bottle of wine or something.
Not kind to the put holders on VXX, but very kind to us here in the content side of the business. So Mr. Dan, if folks want to join your live trading and they have more questions about VXX, they want to ask you directly, or maybe, dare I say it, maybe they want to go on a little bit of a retreat with you. Where should they go? What should they do?
Well, make your way over to markettaker.com and click the Join Now button on the top right. And for a limited time, you're actually going to get access to our MTM community chat room. And I would encourage you to not be a stranger. Fortune favors the bold when it comes to trading. So go ahead and get your free trial. There's lots of great content, especially for newer traders. And join the chat room and be part of the discussion. And man, we've got some traders in that chat room who are just killing it. They post their trades live every day. It's a really nurturing community. You get your questions answered by them or by me or by our other coach, John. So we welcome you with open arms, all the boot camp listeners.
There you go. Check it out. MarketTaker.com is the place to go. Speaking of communities, ours is talking right now about selling put spreads in GameStop. They're a bunch of savages out there. But, of course, if you want to join live for this show, ask questions live, all the other fun stuff that we do, get access to those great pro Q&A sessions where, of course, we offer the world of derivatives to you to ask questions to. We pretty much open the book for you, and you can ask pretty much anyone you want. And we've had quite the slew of great guests over there on our pro Q&As, as well as, of course, on our options oddities every end of every week where we break down a week's worth of crazy activity. Did we spot that shady business in Activision with Microsoft before the regulators did? Yeah, we talked about it on that show. If you want to partake in all that fun stuff, see what we're trading that week and everything else, theoptionsinsider.com/secret club. All right, we got to get on out of here, but don't worry. Brian will be back a little bit later. Maybe he'll have some thoughts on this whole VXX fiasco up there. I know he loves these Franken products in the vol space as well. He'll be live to tape a little bit later today. Back again tomorrow. This week in futures options, going to be talking about a special episode talking about these micro Bitcoin and micro Ether options that CME is going to be launching very soon. A lot of you have been waiting for a smaller, more bite-sized option that you could trade on these things, especially the audience of this show. Everything we talk about is about small size pretty much. So tune in for that one if you're intrigued. This week in futures options, that'll be tomorrow, as well as episode 2 of the Option Block Friday Volatility Views. And we're back again for all you cool kids in Secret Club with options oddities. Then back again next week all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.